So this is super important for Alibaba, man. Think about all the antitrust stuff that just happened with Alibaba. So he's saying this is a great investment time. Hello everyone, welcome to Just Invest Today. And today we're talking about this new Mohnish Pabrai interview, man. Come on. He's giving us so much amazing content. It's actually crazy to think about. It's like every week now. So he did another interview at NUS Business School. Getting in this interview, he actually talks about 4 investments that he actually made and what went through the whole process and how he kind of built his circle of competence. So if you want to watch that part, go watch this interview. It's with the Value Investing Masterclass with NUS MBA students. So go watch the full interview if you want to get that first half of that lesson. But I'm going to be talking about the questions that were asked by the students. The first question that was asked was, opening your own fund at a young age with no track record, how can you do it? Basically, his advice was, if you don't have a track record, it's somewhat dishonest. I encourage you to have something before you take others people's money. But if you're hell-bent on doing it, focus on friends, families, and fools. If you got the skill to invest well at a young age with a modest amount of money, it will grow. The power of compounding, if you're doing mid-20s at a year, you will double every 3 years. After 30 years, and you will have 100x what you started with. So, man, when you really think about that, you don't need other people's money, because if you have a small amount of money, you can compound that at crazy rates. Imagine averaging 20 in the mid-20s for like 30 years. You will literally have 100x, 1000x your money. So he's saying basically that prove to yourself, prove to everyone around you first that you can really do this and really grow your money. And then when you're at that stage, then you can take other people's money. Because, man, are you truly going to be confident in your skills 5 years from now? What if in 5 years you can't even beat the S&P? Why would you take someone else's money when you can't even beat the market? So make sure you can actually build confidence with your investment strategy. And then when you build up that confidence, when you build up that track record, then you could go to other people and get that money, get that capital, so you can really compound your wealth with other people's money, other people's capital. The second question that was asked, what do you think about people who say value investing is dead in the modern era? So Mohnish Pabrai goes on to say, all intelligent investing is value investing. Growth and value are two sides of the same coin. All we are trying to do is put $1 today and hope to get more than $1 in the future. How long it takes will determine our rate of return, and you will do better if you invest in businesses with strong growth prospects, as long as you're not paying too much for the growth. So that's all investing is. It's very simple. We're putting $1 today to get way more dollars into the future. And one of the key things you have to remember is that make sure you're investing in a business that has sustainable cash flows, that 5 to 10 years down the road, it's not going to go out of business, it's not going to fail, that it's still going to have a competitive advantage, because that's what's going to guarantee you your results 5 years, 10 years down the road. Maybe you're not going to know when you're going to get that money back, but if you have a strong business, you can kind of be more confident in that prediction that you're going to get your money back or get that money that you actually put in. So you want to reduce your risk. And with reducing your risk, you have to make sure the business that you buy has a competitive advantage to reduce that risk. Third question, what do you think is the most important asset class? And Mohnish Pabrai goes in to say, we look for anomalies. Generally speaking, they always show up in different ways. So it is the wrong way to approach it. So we don't approach investing top down. So this is very key, because people think that you're supposed to think about, I want to find the best tech companies and then go through all the best tech companies. But that's not how Mohnish Pabrai invests. And you should invest like that too, because think about it. Something crazy can just happen in the market. Like, think about what just happened. Netflix went down 30-40%. So boom. Then you look for that opportunity and see if it's a great company to invest in. He gives an example of just going into Turkey and actually not going to Turkey just to find investments, but just experiencing the culture and looking for companies. And guess what? He found a bargain in Turkey. So you just go to places, you just get more information, you learn more, and then sooner or later a bargain is just gonna appear and you're gonna be like, whoa, you're gonna be interested and you're gonna go head first, look at that company, find out if it's investable, and then invest in it. You just don't look at a sector and be like, oh, what's the best company in that sector? You actually find opportunities by just looking at the news, looking at what's going around, and if an opportunity appears, then you buy it, right? So that's how you're supposed to be looking at investing. Fourth question, I'm going to skip over the Warren Buffett part because he talks about China's economy. He talks about Alibaba and basically investing in China and kind of what to look out for. So the question was, any Alibaba insights? You gotta remember what Mohnish Pabrai did. He switched all his Alibaba shares into Prosus, which Prosus has a big investment in Tencent. So he goes on to say, there's a lot of uncertainty and risk related to the CCP. If they decide to kill the business, they can do it. I don't think they want to do that, but clearly China is going down a path to define rules for big tech companies. Because they have run their affairs like the Wild West, they will face more restrictions and regulations. But the history is when the government went after businesses for antitrust. If you invested right after those investigations were launched or announced, you did very well as an investor, because when the government finally realizes the business has an unfair competitive advantage, that means it has really strong advantages and the company can run circles around regulators. So this is super important for Alibaba, man. Think about all the antitrust stuff that just happened with Alibaba. So he's saying this is a great investment time, because usually after any antitrust, and he goes into saying AT&T, IBM, things usually pick up and boom, because think about it. This is proving to the government, this is proving to every investor that this company has a strong competitive advantage and it's just been killing it. So now the government has to do something about it. But it's kind of too late at that point. They have such a strong advantage, such a strong monopoly that the regulators really can't do much about it. And then he goes into Google and Europe, how they're trying to stop its competitive advantage. But even if they do, they pay 2 billion fine, a 3 billion fine, whatever, it's still going to produce strong results in the future. So when he thinks about Alibaba or Prosus, Tencent, there is a high chance that it's successful in the future, because usually when these companies go through these antitrust fines and regulation, it's way too late, man. These stocks are going to boom, they're going to recover. So this is actually amazing news when you really think about it. And the last question, who should you clone? So he goes into this whole Chuck Akre rant. He gives a nod to Chuck Akre and he tells you to watch his Google talk. And then he talks about Chuck Akre's three-legged stool philosophy. So it goes like this. The first leg of his philosophy, you want to find companies, right, generating high returns of equity on assets, high ROE with low leverage. The second leg, when you're trying to invest in these companies, great people who care about enriching outside shareholders who they don't know, great managers, high ethics, understand capital allocation. Third leg, ability of the business to reinvest its earnings at a high rate of return. And this is going to be the hardest thing to find. We want to find businesses that can actually take all the money it earns and actually invest in growth. Investing that money so it gets a high rate of return with its growth. Think of a company like Starbucks. Basically, it's able to take all the money it earns, invest in new stores that's going to pay off those stores that it actually produced, and then generate all that money back into this business without interfering with other stores. So that's what you want to find. And you want to find that businesses that are expanding, that can reinvest money at high rates of return. That's it for the video, guys. Can you please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.